Hi, and welcome to Lever Brothers tutorial on bullish pennants. Bullish pennants are small continuation patterns that represent a brief pause within already existing uptrends. They're characterized by converging trend lines and have a definite bullish bias based on the overall trend. They typically appear in the middle of a large move or immediately after a stock is broken out of a basing period. Breakouts should be accompanied by a significant increase in volume and a close above the high of the pattern. Trade management becomes more important if these are not accomplished. For starters, the rally into the pattern can be used to establish an expected target, but again, this is just for starters and should not be heavily relied on. Some traders will measure to the far side of the pattern and project it up from the breakout area as shown here. Others will measure to the midpoint. There is no right or wrong answer. This isn't an exact science. Targets are meant to give you a frame of reference to work from. They are not set in stone. The extent of an advance will often depend on the overall market. A strong market will help greatly in achieving an ambitious price target, but in a weak market, a trader should be happy with a moderate gain. Let's check out a couple of examples. Here's Standard Pacific. The stock steadily rallied into an obvious pennant pattern. Volume surged on the breakout and stayed strong for several days, and the high from within the pattern was easily taken out. And in this case, it was the move to the midpoint which did a good job identifying the area the stock would run out of upside energy. Here's Ultratech. The stock was steadily trending up before moving into the pennant pattern shown. Volume wasn't as consistently strong as we'd like to see, but the high from within the pattern was easily taken out and the stock didn't do any backing and filling. The move to the far side of the pattern accurately picked an area profit should have been taken, but you couldn't be blamed for staying in the position since the long-term uptrend was never broken. Here's Noble. Steady uptrend into a 5-week pennant pattern. Volume surged on the breakout and the stock easily took out the pennant pattern's high. In this case, the move from just under 4 to the midpoint of the pattern put the target at about 10, but that level was never reached. We got a nice move, just not the move we were looking for. That's just the way it goes. Targets give you a frame of reference to work from, but once you're in a position, you got to play good defense because you never know what will happen. Let's quickly go through a few more. We find it helpful to look at successful pattern formations to train our eyes. Tradestation. Steady move into a bullish pennant and a solid volume move out. Tractor Supply. Nice 5-week pause within a strong uptrend. Frontier Airlines. Here's an example of a stock that formed a bullish pennant immediately after breaking out from a large base. This is a fairly common occurrence as it takes so much energy to break out of the base, a little rest is needed before the move up is continued. That wraps up this tutorial. Again, bullish pennants are brief pauses within uptrends and should see a significant increase in volume upon breaking out. The extent of the advance will often depend on the overall market. A strong market will greatly help in achieving a more ambitious price target, but in a weak market, a trader should be happy with a moderate gain.